Let's take a look at some business news now. The Department of Public Enterprises has denied reports that government has given South African Airways 9 billion rand to pay part of its 15 billion rand debt that's owed to local banks. According to some reports, last week SAA business rescue practitioners were quoted as saying that government had promised to come up with the remaining 7 billion rand sometime this week. But the Department of Public Enterprises has denied any knowledge of that. It maintains that its efforts to raise funding for a new restructured national airline are proceeding well and an announcement will be made soon. Economists are divided on how the Monetary Policy Committee of the Reserve Bank will move when they meet to decide on the repo rate this week. Some believe that the repo rate will be kept unchanged at 3.5% on the back of inflation rising towards the midpoint of the target bracket. Others say that the Reserve Bank will likely cut by a further 25 basis points because of the worst GDP projection for this year. RMB economists say the low inflation environment and the weak economic growth will likely boost the chances of another repo rate cut. Investec economist Camilla Kaplan says inflation is forecast to increase towards the midpoint of the target range next year, supporting the argument for an unchanged repo rate. The Reserve Bank has so far cut the repo rate by 300 basis points to 3.5%, cushioning indebted consumers as well as businesses against the effects of COVID-19 on the economy. Stats SA is also expected to release the July retail trade sales this week. It's expected that the data will reflect some improvement on the back of the easing of the lockdown restrictions. All right, so it's time now to check how the markets have been performing this afternoon. We're joined by Lavan Gopaul. He's director at Africa Merchant. A very good afternoon to you, Lavan. Thank you so much for joining us. So the rand firming against the weaker dollar, this was in early trade this morning.
We've seen the rand perform quite well. The currency is sitting at about 16 rand 70 to 16 rand 60 to the US dollar, and it's been range bound like that for the last few trading hours. Just to highlight, we've got quite an interesting week in terms of interest rates, and this is guiding the currency markets quite intensely. So this week, the South African Reserve Bank will be making pronouncements on our interest rates, following up from what you've just said with respect to our interest currently sitting at 3.5%, a number of analysts indicating that we could see a 25 basis point interest rate cut to 3.25%. What is interesting to note is that, yes, we've seen a dramatic dip in GDP. Inflation is nowhere to be found. At this stage, there aren't a number of investors chasing assets. So we may have, for a short while, deflation that may come into the system before inflation sets in longer down the road. There's probably a very good reason for a further cut of 0.25% this week, Thursday. The other important news around interest rates is that the US will also be having a meeting with the Federal Reserve to decide on their interest rates, the United Kingdom deciding on interest rates, and Japan. By all accounts, it seems like there is a bit of weakness in the US dollar, and that's what's guiding the rand into a bit of strength. It's expected that there may be some policy changes in terms of the US interest rate, and so you're seeing globally a touch weakness coming into the dollar pricing as it's priced against euro or yen.
All right, interesting indeed. So we wait and see if we will indeed get that cut on Thursday. But then how's the rate of performance when it comes to the price of oil? Should we expect it to perhaps rise again?
What we have seen is some weakness in the oil market. There are a number of geopolitical factors that affect oil, and that has historically been one of those guiding forces, notwithstanding the supply-demand dynamics. Now, it's no surprise with most of the world stuck in a lockdown over the last few months that there has been very little demand for energy. as there's been less transportation, be it on the road or in terms of shipping transport. We've seen very little movement globally, and that oil price has shown the effect of the lockdown. So it's stuck around the $40 per barrel for Brent. It's likely to show even further weakness in the coming weeks. The interesting thing about this is, bear in mind, in other periods, it's high energy prices that has been labeled as the cause for inflation. And as I've mentioned earlier on, I don't see a great deal of inflation expected in the domestic market. And for that matter, I don't see a lot of inflation expected internationally. So I'm thinking that oil could remain around the $40 level and lower, probably bandwidth of about $2 range, so sort of $38 to $40 for the next 2 to 3 weeks.
All right, so let's just quickly look at the equities now. Any winners and losers of the day?
For starters, we can say all that glitters is gold. The gold price moving quite nicely over the last few weeks, edging almost to the $2,000 for a fine ounce. Now, it's passed that level a few times, currently sitting about $40 below that level at around 1,960. That's $1,960 a fine ounce. Of course, the higher gold price has put gold shares and mining houses in the forefront again. So a number of the winners on the exchange today include companies like DRD Gold. Sibanye is one of those that hasn't performed as well, but Goldfields, DRD Gold performing quite nicely. Anglo Gold also in the plus. BHP Billiton, another large mining house, performing quite nicely. A very interesting transaction happening as Anglo Gold has been offloading some of its South African assets to Harmony, and this has been in the news for some time, where regulators have already given the nod. Another company that's featured quite nicely in terms of the plus side today is Bidvest. Having come out with financials today, Bidvest is also likely to see a change in terms of its leadership, as a new CEO may take up that position quite soon. And I think investors are doing a collective sigh of relief as they shrug off some of the losses, and Bidvest coming through a little bit better than what investors had expected. One thing that's interesting from some of the market action over the last few days is the performance of the banking shares. Now, it's no surprise that the banks would have been in negative territory. They have taken a great deal of pain because of a stagnant economy for the last 6 months or so. But where the banking shares in particular have been hurt a little bit more is a change in terms of their reporting style, as they now have to report their bad debts in a different manner. All told, banks are likely to eke out a small profit, but there is a great expectation that bad debts will be on the rise in the coming months, as a number of householders are not likely to make their home loan repayments, or those driving around with vehicles on credit are likely to miss in terms of car installments. It's all going to find its way to the bottom line of the bank's earnings in the quarters to come.
Very interesting indeed, Lavan. We have to leave it at that due to time constraints, but we thank you so much for that market update.
Thank you.
Lavan Gopaul, Director at Africa Merchant, helping us to understand how the markets have been performing this afternoon. We are going to take a quick break. There's still so much more to